Hi everyone, Aaron Ninness here in Denver, Colorado. Another episode of How Much Can I Afford? Today's episode, all about your homeowner's insurance and how that's escrowed into the mortgage. When you buy your home at closing, you are going to pay your first year's insurance policy in full, especially if you're putting down less than 20% escrowed or kept in your mortgage payment. Okay, so your first year's paid, year later comes, how's the next one get paid? Well, every time you've written your mortgage payment to the mortgage company, if it's escrowed, they're taking out a small portion of that payment and putting it into a savings account called your escrow or impound account. When those bills come due, they're going to send that money directly on your behalf to the insurance provider. Now the question is, how much insurance do you actually need? And that depends on the home and the loan. At a minimum, you need to expect that you need to cover the entire loan. If you're buying a $400,000 home, the loan is $380,000. Minimum coverage is $380,000. Now, insurance companies have a couple different verbiages that they could do. They can give you what's called guaranteed replacement, meaning if that insurance policy, it doesn't matter what they put the worth on, if they guarantee replacement and that house burned down, they guaranteed replacement. They're going to replace everything on that home back to where it was prior. Then there's also a lot of times where they just give you over coverage. So they'll give you 120, 140, 160% of what the value is on the home. So again, if they said it's 380, they'll give you 120, 140. So you actually have buffer zone to go over and above. The other thing that is going to be looked at commonly is the cost to rebuild. There are homes that the cost to rebuild is far less than what they're worth. And conversely, there's homes that the cost to rebuild is far more than what it's worth. So that could also play into it. Now, keep in mind what we're talking about in most cases is homeowner's insurance for a single family home where they're covering the entire structure. But if you're someone who's in a condo or townhome and your HOA has a master insurance policy that's covering the insurance on that complex or the building, your job is to insure the interior. Imagine, if you will, that you came to your house and the building had burned down on your townhome. Neighbor had a grease fire, something horrible like that. Well, your first question is, whose insurance is paying for this? 9 times out of 10, it's the HOA. The HOA master policy is going to insure it. Now, if it was a fire on the homeowner's part, that homeowner may have to pay the deductible. That's where you get into more of the insurance side, which I won't go into. But the building would be rebuilt on the HOA's master insurance policy. However, you open the door to your unit, and it's probably just studs. Your insurance company has insured the interior. Drywall, fixtures, personal property, cabinets, sinks, carpeting, wood floor, you name it, that is considered personal property. So when you get your insurance on a condo and townhome, you're insuring the contents and all your own personal belongings. It might look something like $50,000 to put everything back into that condo unit if it were, let's say, a 2-bed, 2-bath condo. But then you need another $30,000 to cover all your personal stuff. Your TVs, your jewelry. If you have firearms, you have furs, jewelry, whatever the case is, you need to make sure you have coverage that covers it. Now, I can tell you from a mortgage standpoint, typically what they're going to want to see is 20% of whatever the house costs, right? So if it was a $200,000 condo, you're going to need $40,000, 20% coverage for the interior. Whether or not that's the right amount is trusting a good mortgage professional or insurance professional, rather, to make sure that they're giving you the right coverage. It's not just about getting the cheapest quote. It's about having the right coverage to ensure that you're not paying out of pocket to get back what you lost through an unfortunate event. Hopefully that helps answer all you need to know about the insurance. As always, if you have questions, you could call, email, shoot me a comment. But make sure you're also subscribing, give me a like, and we'll see you on another episode.